Hey all, welcome to ShareTreck. This is Raj here. It's Sunday and it's 10 a.m. in the morning and I'm thinking, when is the next crash happening and how low it would go? Those are the questions that I'm going to answer in this video. I'll keep it short and to the point. So let's get started after the disclaimer. Well guys, welcome back, and here we are in the TradingView platform looking at Nasdaq index. This is the US 100 index, and the chart that you are looking at has each candle as a 1 month candle, and we are looking at a time frame all the way from 1994 to right now. So you see the entire trajectory of the Nasdaq, and in this you will find that there are times when the stock market has gone up and then come down, but overall trend has been that we have been going up. So what it indicates is that for a long-term investor, you don't have to worry too much because your horizon is 5 years or more, and during that period of time you'll always come out with positives. It's only the speculators and short-term investors who are going to be riding the roller coaster because they're going to look at their portfolio every day. So that's the main message that I have here. Now, while looking at this chart, I can't but help see that we have gone up very, very sharply. The last time we did that was from 1st of April 2020. We went up straight very fast, and then we had a drop. Now, if I was to take a widget out here and measure our jump, the last time we jumped up, we had jumped up around 117.53%, round it off to 118%. And then when we had a drop, we had dropped all the way from, all the way to, let us say, let me just capture this here. We dropped around 35%. So still, we retained a lot of gains that we had, and that's why we landed up here. And we have this diagonal line of support which forms the bull channel. That's the core bull channel, the bottom line. We could go all the way down to there. So if the question is how much are we going to fall, I think we could fall all the way down to this diagonal line of support, and depending on how long it takes to fall, that much higher we'll be on the line of support. So that's one way of looking at it. The second aspect is that if we went up so sharply, and how long did it take us to go that far? So again, I'm going to take a widget and measure all the way from here to the top, and I'm seeing 1st of April 2020 all the way to 1st of December 2021. That's a total of 8 months. Now let us look at our jump out here and see how long we have been on the upward trajectory. So here we are starting from December 22 to September 2024, which is the present time. So we have a total of 32 months that have elapsed since the last drop, and we have gone up significantly. So we are not as steep as we were in the previous bull channel, but we are getting there, and anytime now things have to give way and we might have to come down. And when is it that the market is going to crash, or when is it that the market is going to correct? So correction would be around 10%, I would say, and a crash would be way more than 10%. So here I'm looking at the candles, and I can see that we are still forming higher lows. So we are still in a bull channel. The only thing that worries me is that it is too steep, and steep bull channels indicate a lot of emotion and a lot of FOMO, in my opinion, and therefore there is a chance that we might consolidate, move sidewards. So it may take a little bit of time, but I don't see a crash imminent at this point of time when I look at the long-term charts. Now I'm just going to get back into the 1 year chart, which is what we always look at, in which each of the candle is a 1 day candle. And so we have this chart out here, and we can see in a much more granular fashion. This is our last bull channel, and just to refresh your minds, this is my cup and handle target, which was at 20,854, and I think we almost came as close as possible to 20,854, but didn't quite cross that. But right now where we are is that we have been forming higher lows, but we have not been forming higher highs. The last 2 days have seen us break through another trend line. If I was to take this trend line from here and put it out here, then I would say that we have another trend line out here, which we have crossed. So this is the trend line I would draw, and I would say that we have crossed this trend line. And we have 2 candles representing the last 2 days of trading. And I'm just going to magnify this a little more so that you can see it clearly. So just let me calibrate this again. Yeah, so now you can see this very clearly. So each of these candles is a daily candle, and the bears were trying to pull us down, but the bulls managed to keep us up on Friday. And we had a doji candle the day before. So at this point of time, the momentum looks flat and MACD is still bullish, and we are still above this diagonal line of support. I'll call this a diagonal line of support now. So that's going to be our first line of support. And then the next line of support for us is 19458.11, which we have tested many times before. So that's going to be our next line of support. And after that, I think we have this diagonal line of support, which we are looking at. Depends on how fast we drop. At this point of time, I don't see possibility that we are going to drop. We may probably consolidate sideways, but I don't see a steep fall at this point of time, at least for Nasdaq. Now I'm looking at the S&P 500. Each candle is a one-day candle, and to me S&P 500 seems quite bullish because we have a reverse head and shoulder pattern, in my opinion, and it should have a very strong target. Let me draw out the target out here. My target gives me around 6,100, which is around 400 points more than where we are right now. It seems pretty ambitious, but that's what I see out here. And with regard to S&P 500, I'm not seeing that it's going to fall right away. Momentum is pretty high, even though it is dropping a little bit. It's not dropping drastically. MACD is also bullish. So overall, I'm optimistic out here. Next, I take a look at the VIX, and I can see that the VIX is more or less consolidating between 18.57 and 15.88. So if VIX keeps on going between these two ranges, then I think that we are going to see a little bit of consolidation and steady volatility. Steady volatility is oxymoron, but I think that we'll have a couple of days going up, couple of days coming down. That's kind of the trend we will have. So it's ideal for people who are swing traders if they are willing to take the risk. That's my personal opinion, of course, not financial advice. So this seems okay to me. And if I was to look at XLY by XLP, I can see that the consumer confidence looks much better than it was before. If we were to go back to 5th of August, our consumer confidence had been quite low at that time. Compared to that, we have come a long way. And in terms of percentage improvements, we can say that we have improved almost 9%. So that's a good deal of improvement out there, and the rate cuts are going to spur more consumption because interest charges are going to go down, and it'll allow more money in the hands of consumers, and also employment might pick up, and all those things are going to make consumer confidence even better. And of course, we should not forget we are coming closer to the Christmas season, the Santa Claus rally, and a lot of shopping that might happen. The Boxing Day sales and all those things are still upon us. So there's plenty of opportunity for the consumer confidence to go up and the profitabilities to go up. So overall, I think it's looking good right now. And finally, the put call ratio appears quite bullish to me because we are at 0.887. That's decently bullish in my opinion. It's tending towards more bullishness. So I'm happy overall that things are looking good. However, I came across this website and a very interesting article which talks about the best and worst month for the stock market. It's looking at seasonal patterns, and their conclusion was that for NYSE Composite, October is not at all a bad month. It's just June, August, and September that is bad. And they are saying that for S&P 500, June and September are bad, and for Nasdaq, February, June, and September are bad. So we are close to the end of September. So if this particular statistic was right, then I think we are probably ending our worst month and getting into one of the best months, because for for Nasdaq 100, this chart says that among the best 3 months, they find April, July, and the turnover between October and November, which means the last 2 weeks of October and the first 2 weeks of November. That's the way I read this. So the good part of the year is still ahead of us according to this particular chart. So this was very interesting. So I thought I'll share this with you, because my operating assumption has been that the last 2 weeks of October and the entire month of September is bad for the market. So this is a contrarian opinion out here. But here is another article on CNBC which talks about why September and October are historically weak for stocks. And there are many reasons out here. You can always read this article. Just Google for CNBC, why September and October are historically weak for stocks, and you will find the link out there. So there are different opinions out there, and the bottom line is that we should expect to see volatility until elections are over. The second thing is that November may see improvement based on all those historical data that we have seen. December will see Santa rally, which is a regular feature. And I think especially because interest rates would have fallen further by December, I think this year December sales would be much better than before. And the profits that we would make with our shares when the things improve in November all the way to the year end will all depend on our average cost of holding. And as you had seen, even though many people made profits with Tesla, I made huge losses with Tesla during this year, and I decided to book it. And after that, Tesla has gone up significantly. But if I was still holding Tesla, I would still have been red big time. So we have to be careful when we buy. So that's the lesson that I have. So if you are judicious in buying at the right time, I think you will do way better. So one of the principles would be that you should buy closer to supports and you would be in a much better position rather than buying closer to resistances or on the peaks. So that's the lesson that I have learned. The next question is, what's the bottom line? When is the crash or drop going to happen, and how low will Nasdaq go? I'm thinking that we are not going to see a crash. At the most, we may see a correction, worst case scenario. That's my personal opinion based on whatever I have seen so far. And of course, you guys remember, I'm a retail investor like yourself, so I'm not claiming to be a professional or an expert. So please do your own due diligence before making decisions. But what I'm thinking is that probably we may see volatility in the month of October, and then November onwards things should pick up. But during the October time frame, if we were to drop, I think the first drop will get a support at around 19,460 kind of range, which is where there is a line of support. Then the second drop, if it drops further, could be around 19,370 for the Nasdaq, and the third drop could be around 18,512. And remember, all of these drops together still do not constitute a correction, so things are not going to be as bad as we fear. And also remember, we are on the cusp of a new industrial revolution with AI, robotics, and genomics. So I think good times are ahead. Of course, personal opinion, not financial advice. And guys, I have shared my thoughts without any fear. Now I want you guys to give me your feedback in the comment section, giving me your ideas of how you look at this market and what you see forward for us in the next 3 to 4 months. With that, my friends, I'd like to bring this video to an end. I hope you have a great weekend. I'll catch up with you again. Bye for now.